Hi traders, it's Roberto. It's another tutorial on the 1 hour chart, and today we're going to be focusing on heiken ashi, 21 moving average line, and MACD with MACD settings, default settings of 12, 26, and 9. Very simple strategy on 1 hour chart, so let's get started. First, what you need to do is look and see if MACD, if this line, this perforated red line, if it's above, here's the zero line. Let me just tell you that first. This is the zero line. So when the histogram and this perforated line MACD is below the zero line, then the market's in a downtrend. If price breaks above the zero line and the histogram and this red line are above the zero line, then we're in a buy zone. So that's the first thing we look for. Then if we use heiken ashi candles, we wait for a color change, heiken ashi color change, and then the more conservative approach is wait till price breaks above the 21 moving average line and take a trade. So on this particular setup, you would have entered on the second candle and probably exited at the most recent resistance level. That would have been about 90 pips. So MACD, the histogram, this perforated line, is above the zero line, so we're looking to buy. And then notice that the market didn't have any more sort of like lost momentum, and there's the retracement. And then here again, let me just draw a shaded spot right there when price, rather histogram, and this line broke above the zero line, and we have a color change and heiken ashi breaks above 21 moving average line. Your entry would be when a candle closes above, and again, here's another trade setup. Market went up 142 pips, found resistance level. There's no more trading right now, but histogram and this line is still above the zero line, so technically we're still in an uptrend. So the market changes color. We have a candle. Heiken ashi candles change color, so you can enter the market again. And then it's pretty much over here. Now let's see how many pips the market ended up going up to 79 pips. So it didn't want to penetrate that most recent high. So you didn't have any more room to go. Then what happens? We don't really have any more trades because you could have taken a trade here, but a short-lived price. We're still below the 21 moving average line. Remember, you need confluence of indicators. You need for histogram to be above or below the zero line. Let me just move the zero line again. The zero line is right there. And you also need price, heiken ashi candle, to be above or below the 21 moving average line. So here's another trade setup where price or histogram breaks below the the zero line, and then we start having heiken ashi candles that are below the 21 moving average line. A little bit of retracement here, and then you could have taken this trade, but remember that markets do tend to retest support and resistance level, and that was a resistance, prior resistance, turned red. That would have been a great entry along here below the 21 moving average line. Heiken ashi candles are bearish, and histogram is below the zero line. So remember, when price is below 21 moving average line and histogram and the line on MACD is below the zero line, we're in a bearish momentum. Now what's happening is price is it's found support at the moment, right at previous support level, and we've got a green heiken ashi candle that's trying to break above the 21 moving average line, but we don't have a trade yet. Okay, it looks like it's lining up for a buying opportunity, but we need to wait till this line on MACD and histogram breaks through above the zero line. Then we have confirmation. We can take a trade and then possibly target the most recent resistance levels. Okay, so again, heiken ashi candles, 21 moving average lines. Below the zero line, you're looking to sell. above the zero line, you're looking to buy. We need a confluence of indicators. So when price is above the 21 moving average line, we have green heiken ashi candles, and MACD is above, or rather the histogram of MACD is above the zero line, then the market is in a bullish trend. We're in an uptrend, so we should take advantage of that. And then when price is below here, would have been very difficult trade because histogram did dip below the zero line, but then recovered and turned around north. And these candles essentially are fake, false breaks to the downside. If you did take that trade, then you have to exit that trade when histogram went above the zero line, and then you could have just reversed your positions and made up your loss on this trade. Right now, we're just waiting for histogram to close above the zero line and price to be above this 21 moving line if we're going in an uptrend, if the market decides to retest these highs. And right now, it doesn't really look like it's wanting to do that. Even though this is a green heiken ashi candle, price is trying to break this support level right now. Let's see if we have any more trade setups. Okay, here is another very good trade. Remember that it takes a lot of patience to find, even on a 1 hour chart. It takes a lot longer on a daily and a 4 hour chart. And we're looking for that short scalping opportunity within 12-hour period that you can take advantage of 40, 50, or 60 pips, depending on where you get in. And here, great trade setup. Beginning of the New York session, histogram went above the zero line, price heiken ashi candles above the 21 moving average line, and then that's your trade. And we never know how far these trades will. This one lasted 270 pips, but this is a pound New Zealand dollar, and which a daily range is about 200 pips at times. Okay. Then what happens? We actually had divergence here, and if you know how to trade divergence, you could have easily taken this trade before price went below the zero line, where rather histogram went below the zero line. Though on this particular trade, of course, you still would have made money if you just waited, because price did retrace. We had a change in colors, and usually this is another strategy that if you see a momentum, you see that a downtrend is established, then instead of jumping in, you can wait till you have a retracement, where here we have red candles, then we have green candles, and price resume its trend by changing colors, and this would be your entry, and it coincides with price going below the 21 moving average line. Now, the only time this is not effective is when markets are in consolidation. Heiken ashi candles are not very good when the markets consolidate. You would like to see the market, for example here, a nice downtrend. This is about 7 or 8 hours of the market finding its trend. Price, or rather MACD histogram, is below the zero line, and we have a nice move to the downside, then a retracement, then the market turns around and goes further south. And the whole time, histogram was below the zero line. So we want to favor selling opportunities. We want to sell at here you would have taken a trade below the 20 moving average line, waited for this candle to finish, enter on the second red candle. There's your trade for the day. Same thing here. Histogram is below the zero line, so this obviously is just a retracement. You wait for that retracement to finish, take your trade here, and for about 6-7 hours the market just went on the downside. Now the opposite is true here. We've got histogram lines above the zero line, and market found support. We don't have lower lows anymore, and heiken ashi candles turned green. There's your entry, and of course we're looking for it's about 100 pips. We're not interested in staying in for a few days when you trade off the 1 hour chart. You just want to capture as much as the daily range as possible. There's a retracement. Notice that histogram is still above the 0 line, so you want to take those trades when heiken ashi candles turn green. Here it dipped briefly below the 0 line, recovered, and then heiken ashi candles turn green. Histogram is above the 0 line, so we want to be buying. As you remember, when histogram and the line, this line here that accompanies the histogram is above the 0 line, we're in an uptrend, and there's your trade. Okay, and then again here, markets turns around, and I think we did this already. This example where price is below the 0 line. Now, histogram is below the 0 line, and then price breaks below the 21 moving average line. And notice the slant on the moving average line is slanted downward at a 5 o'clock degree. So that helps us. Here, this is like a 1 o'clock line angle. So we know we're in an uptrend, and then the market turns around, goes the other way. Okay, so that's it. I hope this is helpful. If you had any questions, just contact me at fxnorthwestinstitute.com, and have a good trading week.